Good evening, all. I am Pannaraj, Secretary of SIRC. I welcome you all to the virtual refresher course on bank audit. 2 days program. The topics for the day are expectation of Central Statutory Audits with relevance to statutory banking audit, branch audits, with special focus on recent amendments in LFAR and internal financial controls. Second topic would be effective utilization of banking softwares and the expectation of regulators. Tomorrow, another 2-hour session, that is a practical issues, question and answers on this. So this is a very useful program, which is coined by our chairman, K. Janpati. I request our chairman to offer the welcome address formally. Chairman.
Very respected senior members of our profession and great speakers of this evening, CA PM Veeramani from Kochi, CA Sreevats Gopalakrishnan from New Delhi, CA Srinivasan and CA Ramaswami from Chennai, Secretary of SIRC, CA Pannaraj from Bellary. The most importantly, the viewers of the program. Very good evening to all of you. At the outset, I am extremely happy to introduce for the second refresher course on bank audit for this current year for the benefit of members. We have received the excellent feedback from the members for the first refresher course on bank audit. Based on the members' request, again, we have lined up, as our secretary said, the 4 days refresher course and the interactive session for the benefit of members. But today's program totally different. It is not for the refreshing of subject alone. It is the expectation of Central Statutory Auditors and other regulators. It is mainly focusing to improve furthermore quality on bank audit, branch audit, so that stakeholders will be benefited. Tomorrow will be fully question and answer session. 7th April and 8th April, we have planned like kind of help desk for live questions from branch auditors. I hope most of the auditors will be at various bank branches. From there, members and their students can post any kind of questions relating to bank branch audits. The link already we have circulated through mass mail, for which no CP, and of course there is no fees for this program. With this gracious presence of our today's speakers, the participants will have yet another lively evening session and a feast of knowledge on the subjects. All of them are Central Statutory Auditors, so their in-depth knowledge and their analytical approach on bank audit, which they would be sharing amongst us, will take us newer insights on the subject of discussion today. On behalf of SIRC, I welcome all the speakers and express our sincere thanks to and gratitude to all the resource persons for sparing their valuable time in spite of their bank audit schedules. I am sure this will be the great contribution for the ICAI and other stakeholders. I therefore request the members to actively participate and gain wealth of knowledge out of this program, which I am sure would amply reflect our performance during your bank audit, and certainly quality will improve furthermore for the benefit of stakeholders. With this, I welcome all the members for this virtual program, and I wish every one of you have fruitful professional experience in bank audit. Now we have with us one of the senior most and respected speaker for this first session. He has rich experience of more than 3 decades in corporate and non-corporate audits, central audit of banks, representation before various authorities of the government. He is the regular paper presenter on various branches of ICAI and other professional institutions, staff training college of various banks and various government departments. He is actively involved in various social and trade organizations, including Kochi Chamber of Commerce and Industry and the Kerala Fine Arts Society. With these few words, I am very much happy to introduce CA PM Veeramani to the viewers. Thank you for this great opportunity.
Over to you, sir.
Yes, sir. Over to the PM Veeramani, sir.
Good evening to all of you. I think it was exactly 30 days before 5th of March that I addressed the first session on bank audit, and the host was Society of Auditors President Mr. Ramaswami sitting with me. And that day we had more of questions because it was probably one of the first sessions which was addressed in the bank audit. So we had only a whole lot of questions, how to go about doing the audit, or what are the challenges before us. Now with 3 publications by the institute, I think we seem to have answer to almost all the queries. But suddenly on 23rd of March, Supreme Court came out with a judgment, and that has posed 1 or 2 questions which we are yet to find an answer. So we will be considering all these issues today, even though the chairman of the session said, this would be more of looking at the expectations of central auditors and expectations of the regulators. I would say, as far as the central auditors are concerned, with the revised LFAR and the new internal financial controls reporting requirements, I think we are starting on a clean slate. We can't say last year this happened like this, or these are the common errors which we saw last time. So I think we are all starting on a clean slate. Even whether it is a branch auditor or a central auditor, it depends only the seat where you are sitting, but all of us are starting on a clean slate. And quite surprisingly, we all thought that we may be back on the physical mode this year, but things have turned around today morning in Bombay, declaring almost a lockdown, because they have said today, other than essential services, nothing will be moving from tomorrow onwards after 30th of April. So we could be possibly be having a rerun of what we had in April 2020, because that was not expected, because everybody felt that it could be only areas or some controls could be there. But today, all of a sudden, we had the 6-7 page directive from Maharashtra government, and people have been hurrying through to shift their computers and computer systems to their house for the next 30 days or so. So that is the background under which we are functioning today. So what I thought was, in the light of the revised requirements of this LFAR and IFC, we would first examine what is the role of the branch auditors as well as the central auditors, and where do we ourselves fit ourselves in the whole bank audit. Whether the branch auditor, starting from the branch audit, it has to finally culminate in the central audit. And unlike older days, today we have a very detailed presentations and discussions at the audit committees, where even in the case of public sector banks, we have the RBI nominees also being present, and the scenario has completely changed. It is not just preparing a financial statement and signing it off and coming. So we need to be prepared ourselves to see what is the role, and especially to be seen in the light of these 2 major changes which have come in, which has been discussed at length across all branches, SIRC, everywhere. We have all had discussions on LFAR, new requirements of LFAR, and the IFC also. But in spite of that, we thought, we could just have a review of this. What would be the role of the branch auditors? Where do we stand, and how do they support the central auditors in the discharge of the whole bank audits? And it may not be out of place here to just recall the president of the institute, both the current president as well as just erstwhile president, saying that the whole branch audits itself has come up for review, both at the banks level and at the RBI level. And this may possibly be the litmus test for us to present that the branch audits continues to be relevant. So based on this, I think I'll go into my presentation. So as I said earlier, so we are looking at the role of the auditors in the audit of banks. That is what we are looking at, and we will be doing it in the light of the current year changes which have come in are the new revised long form audit report, both for the central auditors and for the branch auditors, plus the specialized requirements also. Then we'll also be looking into what are the requirements of the internal financial controls for which the institute has brought out a technical guide, which will be the guiding principle for us to how to go about doing it, because this is something new and much more wider than what we used to see in the company audit, which we have been used to in the last 2-3 years or so. And in the end of it, we'll see what is the impact of the Supreme Court decision and how we are going to address that. First, let us see what does the RBI circular say on 5/9/2020 when the new revised circulars, LFARs were brought in. And the reasons why they have brought in the new circular, they have said, keeping in view the large-scale changes in size, complexities, business model, and risks in banking operations, a review of the LFAR formats in consultation with the stakeholders, including ICAI, was undertaken, and it has been decided to make the following changes. So the institute was very well aware of what were the changes that were coming in, and probably would have known also what are all the objectives behind this. So it is not that it has come as a surprise, and it was been publicized much early in September 2020 itself, so that most of us had enough time to go through this. So nobody can say it came at the last moment, we didn't have time to go through, etc. It was been there for almost 6 months now, and a lot of discussions have also taken place. Now, this is how the LFAR has been, new formats have been revised. There is an Annexure 1 which is for the Central Statutory Auditors, and Annexure 2 for the branch auditors. I think the branch audit format should have been with the branch auditors along with the audit appointment letters, and most of you would have gone through it, I suppose. Then it has an appendix as part of Annexure 2 for specialized branches like foreign exchange branches, asset recovery branches, etc., which was there in the earlier LFAR also. It is there here also. Then we have an Annexure 3, which is very similar to what we used to have for the large accounts of more than 2 crores. Now, what we see in Annexure 3, and they have very clearly said that Annexure 3 applies for the asset recovery branches also, ARC branches also. So those of you who are getting, who have got the appointment letter for the asset recovery branches will have to look into the Annexure 3. And if you look at the Annexure 3 requirements and also go through the technical guide of the institute, we will find that, you know, the old format or the Annexure 3 basically has to be prepared by the branches. And earlier, we used to have a last box to say auditors comment, which is conspicuously missing this time. But what the institute has in its technical guide says is that every point, which I'll be covering in detail in the presentation, where they have said is you have to relate it to the Annexure 2 under the advances. Whatever issues arising out of this details, what has been given to us, will have to be covered in the Annexure 2 under the column advances. So this is the basic framework of the whole LFAR. And what I would be looking into in the LFAR, or I would be discussing in the LFAR, would be the objectives which the RBI has put it out for both for the branch auditors as well as for the central auditors, and also the clauses which require clauses and the references to the RBI circulars based on which this has been issued. And those of the CSAs who have been part of the CSA would have faced most of this queries questionnaire in one of their SSM meetings, and it is nothing surprising as far as the people who have been doing central audits are concerned, because most of these questions relating to the branches have been posed at one meeting or the other over the last 2 years, and finally it has now come as in the official LFAR itself. Now, for the whole bank LFAR and for the branch LFAR, the scope has been defined separately. Now, for the whole bank, they have said some of the matters to be dealt with by the SCA in their LFAR will be based on LFARs received from the branches. In dealing with such matters, the SCA are expected to exercise their own judgment to make their observations on the basis of the review of the branch auditor's LFAR. So it is not no longer a copy paste of branch LFAR into the whole bank LFAR. because substantially the format of the LFAR for the branch as well as the head office has for the whole bank has undergone a change. So the SEAs are expected to their own review of the branch LFARs, and as I understand, in many of the banks, the central auditors are, I think, dividing themselves and looking into the LFARs at the regional level or at the zonal level rather than seeing it at the central level. Now, if you compare the audit report that has been given for the whole bank as well as for the branch auditors, we find for the long-term audit for the central auditors, there is no questionnaire at all. It is broad headings have been given in which we have to bring in a free-flowing report has to be brought in. Only thing is that they have covered the areas by the state branch auditors have also to be incorporated under the respective headings. So the compilation of the whole bank LFAR would be more of a challenge because you don't have any questions to be answered, but rather you have only the headings where we need to frame our views and points along with the branch auditors report into the whole bank report. Whereas for the branch LFAR, there is a detailed questionnaire under broad heading eliciting specific answers and in many cases with supporting details also. Here, what would be required would be for to enable the central auditors to compile the whole bank report. It may not be adequate if only the specific questions are answered. Rather, the branch auditors may have to go a little further. Being the first year, we are all new to this. We may have to go a little further and try to elaborate a little more, maybe based on the requirements of the RBI circulars, which I'll be discussing under the specific headings. Maybe you'll have to look into those areas, and wherever possible, some additional details may also have to be brought in. Now let us look at the objective of the LFAR. For the whole bank, they have said the overall objective should be to identify and assess the gaps and vulnerable areas in the business operations, risk management, compliance, and efficiency of internal audit, and provide an independent opinion on the same to the board of the bank and provide their observation. So this is totally a macro level approach where no specific details have been asked. They have said identify and assess the gaps and vulnerable areas. So and if you see, the risk management has been brought in, which is what the RBI has also been doing. They have given away the old AFI or the annual financial inspection reports have now given way to what they call it as RMP, or the risk management for plan. After the annual review, every bank is given a risk management plan for each year, giving the various areas where the RBI has feels that the risk has to be controlled. So that objective has been brought into the whole bank LFAR. While if you see the objective of the branch auditors, you would see the objective of the branch audit should have the transaction testing and provide inputs to central auditors on the adequacy of implementation of various policy and regulatory requirements, including efficiency of the system and assurance functions, compliance at the branch level. In one way, it is very, very satisfying because this transaction, the need for the branch audits to be continued, the institute has been harping on the transaction testing and stating that the transaction testing can take place only at the branch audit level, and that has been one of the reasons provided by the institute saying that why the branch audits should continue. Now it has come as the objective of the bank LFAR itself, which is very, very satisfying that the RBI or the regulator has also appreciated or rather approved the institute's views also on this area. Though it goes on further to say verification of data integrity and data related control systems and processes should be carried out and commented upon, with special thrust on those data inputs which may be used for MIS at corporate office level and for supervisory reporting purposes. So it does not stop with the financial statements, it even goes into the MIS which would be used for the disclosure purposes in the notes on accounts or other ratios, etc. Even those also will have to be the areas, also will have the data integrity of those areas also will have to be commented upon in the reports that we are going to say, both in the LFAR and when we go through the questionnaire, you will understand that also. So it is not just on the balance sheet or on the trial balance or the statement of affairs which we are talking about. Even data which is culled out and given for MIS purposes also would have to be covered in the branch LFAR. Going further, they say reporting to be with reference to the compliance with the RBI circular relevant for the said area. So they themselves say very clearly reporting should be with reference to compliance with the RBI circular for the relevant for the said area. Here, when you go to the branches, you would find that most of the branches may not be aware of the RBI circular. They would only be following the internal circular issued by the banks, which should be carved out of the, in a much simpler language, carved out from the RBI circular. But as far as the auditors are concerned, we may have to, even though we can have a look at the internal circulars, but finally our reporting will have to be based on the requirements as required by the RBI circular itself. So the branches do not directly interpret and follow RBI circular, but follow the which are issued based on the RBI circular. Now we will look into some of the clauses where and the relevant RBI guidelines. So this, we'll just quickly run through that. One of the new clauses which have come in is that, have you come across cases of quick mortality accounts where the facility becomes non-performing within a period of 12 months from the date of first sanction? If you look at the question, it talks about only facility non-performing with a period of 12 months. But if you look at the RBI requirements, it's defines quick mortality accounts are defined as bank accounts which become NPA within 1 year of original sanction or first disbursement, and in the case of housing loan within 1 year from the date of commencement of installment, whichever is earlier. So for housing loan, there is a carved out area for quick mortality. So that is why I said it may not be enough if you just look at the question and then provide the answer. You need to necessarily look into the RBI requirements also. This is what the quick mortality is defined in the RBI circulars. Now, this is another new area where they have said where the interest rate is reviewed periodically as per guidelines applicable to the floating rate MCLR or EBLR. And as we all know, the last circular has come out sometime on 4/9/2019, which says the interest rate under external benchmark shall be reset at least once in 3 months, which I am not sure whether the branches would be knowing, but definitely we need to see and test whether this is being done. And they have also said all floating rate rupee loans sanctioned and renewed with effect from 1st April 2016 shall be priced with reference to the marginal cost of funds lending rate, and which will be the internal benchmark for such purposes, subject to provisions contained in paragraph 7 of this master direction. Now you would understand that, see that they have brought in here the master direction also here. So we need to necessarily look into the 4/9/2017 circular before we start replying to the answer, just saying yes or no, because they have said the reviewed periodically as per guidelines is what they are asking. Next, whether the correct and valid rating from accredited agencies correctly fed into the system. Now the RBI says guidance note. It is not this one. Guidance note and credit risk management by RBI says a rating scale could consist of 9 levels, of which 1 to 5 represent various grades of acceptance credit risk, and levels 6 to 9 represent various grades of unacceptable credit risk associated with an exposure. So if you have been seeing the branch proposals which are put up for the sanction to the board or to the management committee, you would find there will be two ratings would be given. One, the internal rating, and what would be the external rating. Now in the SSM meetings, what we have found is that the RBI has been saying many of the exposures which have been taken have got the investment grade with reference to the internal ratings, while when it comes to the external rating, it may not be of investment grade, and if such cases are found, they are required to be reported. So that is why I said it is not enough if you just look at the correct valid rating. Yes or no is not the answer. You may have to go a little further and find out what the ratings are given, especially in respect of new advances which have come in or advances which are taken over, etc. Where if there are any specific cases where you find that this dichotomy is seen, where the investment grade is internally investment grade is above investment grade, but externally it is below investment grade, such things may have to be reported upon. because these would go a long way when we are finalizing the risk matrix and the risk management levels, which we have to say at the whole bank level. Did the banks provide loans to companies for buyback? The bank should, there is a specific circular which says that the bank should not provide loans to buyback of shares. So obviously the answer has to be no only. So if somebody is going to say yes for this question, naturally you will have to see whether this was being within the powers of the bank. Does the bank have its account a due diligence report in the form and manner required by Reserve Bank of India in respect of advance under consortium and multiple banking arrangements? This circular is a way back circular in 2009, which is more on the compliances with the Companies Act 1956. Whether the company secretary, because the certificate of the circular itself says the certification can be preferably from a company secretary and also from chartered accountants also. I don't know whether the branches have been regularly obtaining this, but now there is a specific questionnaire which says, does the branch have on its record a due diligence report in the form and the manner required by Reserve Bank of India? So naturally, we need to see now, find out whether this certificates have been periodically obtained and has been held by the branch. Somebody may take a view that this is under 1956 Act. Obviously, the circulars would have to be modified to the 2013 requirements, because they are now linking into the company law requirements in this case also, because this would be a very, this is a new clause that's been added with a little more depth than what we are thinking. Whether the branch has any red flagged account, if yes, whether there are deviations observed related to the compliance bank's policy with red flag accounts. I would rate this circular or this clause could be the most important ones as far as the whole bank audit is concerned, because this is covered under the framework for dealing in loan frauds. Now, if you look at the red flagged account, see what the basic question is whether it is in the red flagged account. The question is not whether it is a red flagged account, but how it gets in classified as a red flagged account is relating us, taking us to a much more serious one, where it says an RFA is one where a suspicion of a fraudulent activity is thrown up by the presence of one or more early warning signals. And if you go into the circular, you will find that there are about 45 parameters being given, which are already early warning signals, which are there. If one or more of them are present, then that itself is a vulnerable area which requires to be reported. If you find that in the later part of the LFAR, you would find this requires to be reported upon. So this would probably the most important area, because as we have been reading in the papers, the Reserve Bank of India is expected to take up the AQR or asset quality review sometime in June, July this year. So that would definitely, and we had the earlier experience when the AQR was taken up, there were several accounts which were classified as standard in the bank's books where had to be reclassified, and such an activity could come up this time also. And the way they would be looking at it would be the presence of one or more of the early warning signals. So I would request all the branch auditors be familiar with the this particular circular, and especially the annexure where it talks about the early warning signals. And it is also carried in some part of the LFAR also. So this requires to be seen. Now, the way how you can go about looking at it could be that, most of the branches, banks have devised the exception reports for branches where these are likely to be covered, and probably by going through the exception reports would give you an idea of whether these early warning signals are there. And if one or more of the early warning signals are continued or persistently present in a particular account, then possibly your LFAR would require a much more modified report to be given, rather even if the account may be standard, account may be within limits, account may be serviced properly, even then, if there are one or more early warning signals appearing in that account, that would require a comment. And if you would see the scope that is given in the branch auditor's report, it is 10% of the advances or 10 crores of rupees. So 10% would be a very unlikely figure. No, not many accounts may be there which are more than 10% of the total advances, but above 10 crores, almost there could be many accounts. If it is a 1,000 crore advance branch, more than 10 crores, there could be very many accounts where one may have to test this whether these early warning signals are going to be present. because if you look at the Central Auditor's report, this takes up once where we have to talk about the risk management. This early warning signals would take a very, very important place. Now, when it comes to sundry suspended sundry assets, they have said in excess of 90 days reasons to be obtained for adjusting memory be ascertained. And there are items which are not recordable requiring provisions of write-off, which we generally do in suspense account. But if you look at the other way, are there intangible items under this head, losses not provided pending investigation? This is another new area possibly which has come, because there could be very many cases where there could be ATM frauds or the deposit frauds, where the customer would have been paid and this would have been parked in sundry assets or suspense account pending the investigation that are to be done by the bank before finally it is classified as a fraud or otherwise. But in such cases, now they have said if there are items parked in sundry assets and suspense account, then probably you will have to say whether any provision is required. But even if the provision is not required, if you are going to say yes under this head, then obviously the disclosure under contingent liabilities should find a place if you are not going with an MOC, because this automatically flows from there. Now they have got the deposits are also coming under a lot of questionnaire this time. They said, does the bank have a system of identification of dormant and inoperative accounts and internal controls with regard to operations? Now, identification of dormant accounts are, and have you come across where the guidelines laid down have not been followed? If yes, give details thereof. This, if you go back, it is an old 2015 circular, the master circular, customer service in banks, which generally, as auditors, we may not be going through, where it says what are the requirements, where it says savings as well as current account should be treated as inoperative or dormant if there are no transactions in the account for over a period of 2 years. Accounts which have not been operated upon for 2 years should be segregated and maintained in separate ledgers. So that would be the area which would tell us whether there is a system of identification of dormant or inoperative accounts, and then how well these are controlled and these are reported upon. And in most of these cases, the bank would be reporting on all these accounts. There would be some internal system reporting systems also. How effective as this would be required? It would not be enough if you say yes or no in this regard, because they say, have you come across instances where the guidelines have not been followed? Then you need to give a detailed reports may have to be given. Now here, minimum balance also there is a requirement this time. Is the branch complying with the minimum balance requirements and levy of charges? And if you look at the RBI circular, it is a way back 2014 circular where there are very many reasons being given how an account with a minimum balance should be considered. How these could possibly be covered by internal circulars only, because we may not be able to get an answer whether the penal charges are proportionate to the extent of the shortfall, or penal charges should be reasonable with regard of cost of services, etc. These could possibly be covered only under the internal circular. So in these cases, we may have to call for the internal circulars also, and then possibly start reporting on the minimum balance requirements. And my experience in the bank audits has been that the RBI has also been taking up very seriously this issue, because where the SB accounts turn negative on account of this levy or excess charges are made, they have made some of the banks to repay this also. And this has also come in the papers, and there have also some of the banks have been penalized also. So these are all areas where, micro level areas which we never used to look into earlier, but now requires to be looked into. Compliance with KYC AML guidelines, and this goes back to a 2002 circular which has been modified up to 2020. And even though they say KYC AML, it covers very many items. It's not only know your customer, anti-money laundering, then combating financial terrorism, obligation of banks, and under the PMLA Act, everything has been covered under this. And we are not very familiar with the guidelines. In many of these cases, this could also not be handled by the general branches departments. It could be handled by specialized departments or specialized officers in the department, in the branches itself. So before we can answer on this question whether the compliance has been given, you may have to require to go into what are the reports that are being generated, what are the exception reports, if any, that are being generated, whether there are any queries being raised, because the queries in this may not come from RBI or from SEBI. It could be coming from Ministry of Home Affairs or Ministry or FTU or other departments also. So one need to necessarily go into, and in many cases the answers may not be given by the branches directly, but it could be given to the head office, and head office could be giving, the compliance department could be giving it to the respective departments. That is why they say in the beginning of the LFAR itself, the controls over the MIS systems also need to be looked into. So what are the queries raised by the received by the branch, and how it has been replied will have to be gone into. Customer account diagram, monitoring and transaction service management. Now, if you look at the foreign exchange branches, they say material adverse features pointed out reports of concurrent auditors, internal auditors, or RBI, which continue to persist in relation to certain types of accounts. So it has to be material, and it has to continue to persist. You need not go after this adverse features. They say you look into the concurrent auditors and internal auditors report, or in other words, it would show the effectiveness of the concurrent and the internal audit reports also as a review through the branch audit reports. And they have said whether the instructions are followed, if not irregularities observed, have to be known. Because if you look at the first clause, the advances clause in the LFAR, it talks about not only fund-based advances but non-fund-based advances also are also to get covered in the review operations that has been given. Then large advances at ARC, even though the annexure is to be prepared by the branches, if you look at the technical guide in page 165, it talks about the auditor's role. This is what I said in the beginning. The auditor is expected to verify the information given in this annexure critically and give his observations, comments in the respective section of the LFAR. The auditor is advised to refer to chapter on advances given in the guidance note of audit of banks edition for further guidance. So don't just flip it over or just leave it saying that there is nothing to be done by the auditors. The technical guide is very clear. What is the auditor's role to be in respect of this large advances? And if you are doing any of this asset recovery branches, then this becomes more crucial, because especially the valuation, etc., would becomes very crucial, because the questionnaire are very detailed one. Then it says the auditor should comment about the completeness of the information filled in this annexure, and wherever he observes that the information is not properly filled in, the same should be reported in advanced section of the LFAR. So if it is a major branch, say, and if it is to be given for all the 10 crore and above advances, then that is substantially a big job, because each of this format will run into about some 12-13 pages, where you will have to necessarily go into in detail, or in other words, we may be going through the files, but this would give you a full complete picture of the large advances. Or in other words, if you look at this, you find the entire gamut of the large advances review gets compiled into this annexure 3 report itself, annexure 3 report, on which the auditor has to make a comment. Now, this will we will be able to conclude what are the conclusions we arrive at this LFAR. Now, because this LFAR has been printed out one earlier, now this year most of the banks have moved into web-based reporting of LFAR, and hence will have to be completed in the branch itself. Or rather, if you ask me, I would say first you should start compiling the LFAR and start looking into each of these clauses, which in effect would be the major part of the audit. Then what remains would be only the financial statements to be looked into and certified. So this has to be done side by side and may have to be filled up there itself. Branch LFAR would form the basis for reporting by the SCA on the whole bank LFAR, as the branch findings will have to be incorporated under appropriate areas to be covered by the SCA. So that is why I said we have got a revised role. It is not that just some of the branches, the material matters are just taken and incorporated, because it will have to be incorporated in the respective places by the SCA. And this web-based reporting could make it easier for the central auditors also, because similar items could be grouped together and then compiled by made the compilation at the whole bank level. So thus the whole advances section or the total LFAR major sections will have to be carefully gone into, especially being the first year where we don't have nothing to fall back upon. And even if you look at the guidance note issued by or the technical guide given by the institute also, they have also given a very broad guideline only. They have not given any specific areas because we are yet to see, we are yet to test it, we are yet to start reporting on these areas. Reference to appropriate RBI circulars and extent of non-compliance, if any, in the branch reports will help in better presenting the matter, because that would be the way, because when it comes to the central reporting or some of the certificates relating to compliance with the RBI circulars, this for proper compilation of this could probably help in presenting the whole bank level at the whole bank level. That covers the LFAR, and now we go to the second and most important report which has come in, which is the internal financial controls on financial reporting. Here again we have the institute's technical guide which has come out, and I'll just rush you through what are the requirements of this requirement. Even though we have been familiar with the internal financial controls reporting requirements for the companies, now when it comes to PSB, it is a different ball game altogether, because if you look at the technical guide, the institute has already come out with a technical guide for the general companies, and if they have gone and brought about a separate guide for the PSB, that would show that it is on a different wicket altogether. And let us examine what are the major items in this. The question is a simple one: whether the bank has adequate internal financial controls in place and operating effectiveness of such controls. This is one line that has been given in the audit report, but to give such an answer, you need to really go through many things. The requirement is applicable only for public sector banks. Then, as I said earlier, ICAI technical guide is to provide the guidance to the auditor. Now, though it provides that all branches need not be tested and reported on, but can be scoped in, it is understood that most of the public sector banks are covering all the branches covered by the audit. So if you are getting a branch audit, obviously you please look into the appointment letter. In most of the cases, whomever I have discussed, the internal financial controls have also been covered. So you have not, maybe because it is the first year, no bank has taken a risk of scoping in, or no central auditor has taken the risk of scoping in and saying these branches need not be covered. They have taken the risk of, they have said that let us get all the branches which are covered under audit, let us get a report by the branch auditors on this area. Now, what is the meaning of internal financial controls over financial reporting? If you look at the general companies, this one, it was basically only on the reporting requirements of the financial statements, but when it comes to the bank, it takes a different picture altogether. The guidance note says, bank's internal financial controls over financial reporting is a process designed to provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statements for external purposes in accordance with generally accounting principles. This is generally what we have understood. Then it goes on to say, bank's internal financial controls or financial reporting includes those policies and procedures that pertain to maintenance of records that in reasonable detail accurately and fairly reflect the transactions and dispositions of the assets of the bank. Here in this case, the assets of the major assets of the bank would be the advances. Then, 2, provide reasonable assurances that transactions are recorded as necessary to permit preparation of financial statements in accordance with generally accepted accounting principles, and that receipts and expenditure of the bank are being made only in accordance with authorizations of the management and directions of the bank, and provide reasonable assurance regarding prevention or timely detection of unauthorized acquisition, use, or disposition of the bank's asset that could have a material effect on the financial statements. So it is not just the financial statements that they're talking about. Generally, over the entire internal financial controls are getting covered under this. That is why I said earlier that that is the reason why the institute has come out with a separate technical guide for the public sector banks. And before you use the technical guide, you need to be familiar with some of these short forms which are used extensively in the technical guide. What they talk is ELC is the entity level controls, which are the controls that exercised at the whole bank level. then what they call it as GITC, General Information Technology Controls, which are applicable across the branch level. Then FCRP, Financial Closing and Reporting Process, which is essentially the what we are looking at and certifying. And last is the risk control matrix, because each bank would have based, because this circular actually, the requirement actually came in on March 2020. But because many of the banks had not carried out the risk control management or risk control matrix, they extended the application of this particular requirement to 31/3/21, and most of the banks have gone through this, and either through internally or through an external agency, they have identified which are all the risk control areas covered to be covered under the risk matrix which they have set. And based on that, they have said where are all the possibilities of a financial error in the financial statements can come, and what are all the mitigating factors which can be looked into in respect of the financial statements. Now, if you look at para 16 of the technical guide, it evaluates the after you go through the guide, you will find that you have to finally evaluate it into 3 headings. One would be the material weakness, where they say there is a reasonable possibility that a material misstatement of the bank's annual or interim financial statements will not be prevented or detected on a timely basis. So it is not that it is happening today or it has happened today. It says reasonable possibility cannot be prevented or detected on a timely basis. In that is case, then there is a material weakness that ultimately, if you say, they say, if there is a if the bank has not compiled the risk control matrix, and during the testing, if you find that there is a possibility of a financial mistake, material misstatement happening, then it has to be taken as a material weakness, which might require a mention in the audit report. Secondly, they say what is a significant deficiency? Significant deficiency is less severe than a material weakness, yet important enough to merit attention by those responsible for oversight of the bank's financial reporting. So it is somewhere between a very small deficiency and a material weakness. It comes between this one. It says less severe, but at the same time, so these could be cases where the risk matrix has already been found out, but still there is a possibility of a material misstatement happening. Then it comes as a significant deficiency. Then lastly, the deficiency or operational control does not allow the management employees in the normal course of performing the function or to prevent or detect statements on a timely basis. It is less severe than a material weakness or a significant deficiency. So these 3 evaluations, you need to definitely understand what are the requirements, how you can decide whether it is a material weakness or a significant deficiency or a deficiency, because the categorization of your findings into these 3 would finally decide how your internal financial control report is going to be framed. Now they say SBAs to categorize the entries proposed to the MOC into each of these categories: material weakness, significant deficiency and deficiency, and then decide the branch report to enable the SCA to appoint on the IFC for the PSB at the HO at a consolidated level. So you can imagine how important this function is, or how important this area is. Even though it is added as a simple line in the audit report, it actually requires an entire area to be covered and to finally formulate a report on whether to give an adverse report or to give an unqualified report. Now again, for if you look at again the technical guide, there is a particular para for 31/3/2021 and then for the later years. For the first year, they have said auditors to go through the instruction in para 19, where it says, if on testing controls of ELC, GITC and FCRP, this is what I explained earlier, the auditor has not noted any control weakness, the SCA or SBA may issue an unmodified opinion on IFCO, FFR or PSB in respect to the year ended 31st March 2021. I request all the branch auditors to kindly go through para 19. It runs into about 7-8 paragraphs, which kindly concludes how you have to finalize the IFC report for the branches as such. Now that is as far as this thing is concerned. Now I find that in most of the bank, I don't know how other banks have done. In Union Bank of India, where we are the auditors, what we have designed is we have formed an Excel sheet consisting about 41 areas where we feel the testing has to be done at the branch level. And in each of these 41 areas, the branch auditors will have to go and tick yes, no, or not applicable. And if in all cases where the answer is no, that would be a case of the areas which would finally decide how you are going to finally report on the internal financial controls. I am sure that other banks also would have come up with some questionnaire like this, and one needs to definitely go through the communication from the central auditors to the branch auditors, or in the closing communication from the branch from the head office to the branch auditors could be containing this. You need to closely go through this and find out and what exactly are the requirements. It may differ from bank to bank because we have not had much interaction with many of the auditors. Of course, I have been talking to Ramaswami, who is the auditor for State Bank of India. Other than that, I have not been talking to many other auditors, so I would not know how other banks have been approaching this. Now, once the testing is over, when it comes to the auditor's responsibility or what we have to do in the auditor's report for the internal financial controls, it has to be attended to in two parts. One, the main audit report where we give under auditor's responsibility. If it is a branch which is not under testing, let us take I don't know whether any banks are there and which are not under testing, there the main audit report should contain a statement, add a paragraph saying that obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in circumstances, but not for the purposes of expressing an opinion on the effectiveness of the branch's internal control. So here, when you go for the branch audit, you necessarily have to test the internal financial controls. But if you are not required to provide a separate report, then you need to carry this paragraph in the main audit report itself under the auditor's responsibility, and you are through with it. But if it is a branch under testing, in the main audit report, you need to have this paragraph, but you need to cut the area called this area will not be there, but not for the purpose of it, because you are going to express an opinion. You will have to carry in the main auditor's report, obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate under the circumstances. Where it is to be added, if you go through the guidance note, you will understand. But this is the crucial difference between which are branches which are under testing and not under testing. It doesn't stop there. Then under the legal and other regulatory requirements, you need to have this paragraph added. Our audit report on the operating effectiveness of branch internal financial controls over financial reporting, as required by RBI letter, dated, etc., is given as in Annexure A to this report. Our report expresses unmodified, qualified, etc., order for a branch as such. So this has to come under the legal and other regulatory requirements, which will be followed by the Annexure A, which is the main report of the internal financial controls, which again is getting divided into 3-4 paragraphs, where you have an introduction, then it talks about management responsibility, it talks about auditor's responsibility, then it talks about you have to add a paragraph on the meaning of internal financial controls. It talks about inherent limitations, and finally it has the last paragraph of opinion, based on which you will decide whether it is you are giving an unmodified opinion or qualified opinion or an adverse opinion. So it will be based see, if you would look at it in any bank's case, it is only 90% of the branch audits are 90% of the advance are getting covered under the branch audits. So there could be very many branches where the audits may not be carried out, where these reports will be certified by the respective branch managers. Plus the auditor's report has to be gone into by the central auditors to decide at the whole bank level whether it has to be unmodified, qualified, or adverse. So since it's a new requirement, this would be definitely an area of interest and much looked upon by the regulator also. Now we'll come to the last part of it. What is the impact of the Supreme Court decision onto the on account of what has happened on 23/3, this one? And though, as you all know, there have been as far as the interest reversals are concerned, we had one circular in October 2020 where the government of India came out with a scheme called ex gratia scheme, which covered the advances which are less than 2 crores under MSME certain sectors, where they said it would be covered as an ex gratia and the compound interest would be reimbursed by the Government of India, and that circular had come out sometime in October 2020, and the modality is working out that also had said had also been prescribed, based on which most of the banks have reversed this interest and then made the claim on SBI. So that entry has already found a place in December 2020. Now, in addition to that, the Supreme Court has come out and made this one in the decision of the Small Scale Industries Manufacturers Association versus the Union of India. This was the decision rendered, and these are the major parameters. Most of this are not connected to us. It says no total waiver for interest during moratorium period, no extension of period of moratorium, no extension of time for invocation of resolution of mechanism beyond 31/12/2020. RBI can provide sector-wise relief. Request for further relief by central government and RBI dismissed. And the last one is what is important for us. It says interim relief not to declare account as NPA stands vacated. If you look at most of the banks' quarterly reports where they said because of the Gajendra Sharma's, it was not on this decision, it was decided on the Gajendra Sharma's decision where Supreme Court has said post 1st of September, they said no account shall be classified as NPA after the moratorium pending these areas to be looked into. So no bank was doing it, even though there was no requirement by RBI in the classification, or there was no changes in the RBI requirements regarding IRAC norms are concerned. So what the banks were doing was making this on a mock basis and providing it globally at the central level, because the account cannot be classified as NPA. Now the question, now with this Supreme Court judgment, they have said not to declare NPA stands vacated, which means all the accounts will have to be classified and stamped as NPA according to the IRAC norms, which would be a major exercise which the banks will be taking during this quarter. And the most important point where what the branch auditors may have to look into would be what would be the date of NPA, because there appears to be some lack of clarity between bank to bank, because the decision has come only in March 2020, but some of the banks, it seems, have taken a stand that the date of NPA would be 31st of March when they would be applying, while some other banks have taken the stand that, you know, what needs to be done, the IRAC norms has not undergone a change. So it is only the decision has come now. So what they will be doing would be the working out the 90-day.
You are not audible.
Am I audible now?
Yeah, audible, sir. Audible, sir. You're audible, sir. You can continue.
So probably my earphone would have got this. So as far as the interim relief was, earlier the banks were the banks have taken, some banks have taken a stand that the NPA norms have not undergone a change. Only thing is that it has the for working out the 90-day, the period of moratorium has to be excluded, and once that is excluded, you apply the 90-day norm and then they apply the NPA date. So I think that according to me would be the right approach, but then we need to see on a bank-to-bank basis. So this is one area where the branch auditors will have to go very closely look into, and this would have happened only during this quarter, because until December, because the stay was around, the banks have been providing it only on a global basis. And this is the most important one where we are also interested, because there shall not be any charge of interest on interest on interest, compound interest, penal interest for the period during moratorium, and any amount already recovered under the same head, namely compound shall be refunded to the concerned borrowers and to be given credit or adjusted in the next installment of the loan account. So they have said if you have collected, you have to either refund it or it should be adjusted in the next installment of the loan account. Now, so this entry has to find a place as far as the banks are concerned on 31st of March when we finalize the branch audit. Now, where is the issue now? Now, when it comes here, how to go about doing it, because this came only on the 23rd of March, and on 26th of March, IBA has issued a letter to all the banks to say that the reason for issuing this one, they have said it is to evolve a common approach to the to be adopted by the bank, where they have said three conditions. A, moratorium period 1/3/2020 to 31/8/2020 to be excluded from reckoning the number of days of NPA, regardless of whether the borrower has sought for moratorium or not. So irrespective of this one, you have to exclude this period for calculating the number of days for becoming this one for the compound interest. Then it says compound interest, interest on interest, penal interest, if charged, to be refunded or adjusted towards future installments within a reasonable time. This is what the IBA has said. So does it mean that it need not be done as of 31st March? Is a $1 million question, but definitely I'm very sure that because this has got a material effect, if you go by the paper reports, even though the actual refunding or the adjustment to the borrower may take a later date, I'm very sure that this has to be given effect to in the financial statements for 31st March itself. Then thirdly, to pursue the Government of India under ex gratia scheme, which as auditors we are not concerned. Now, what is the unresolved issue in this manner? So banks are also convinced that they have to reverse the interest on interest. Now the unresolved issue is that the manner of working out the interest to be reversed, because under the government scheme and our Institute Accounting Standards Board, I believe, has issued a directive that the methodology prescribed in the GOA circular of October 2020 should be used for the ex gratia scheme should be used here. Now, many banks are not happy with this because under the ex gratia scheme, they have said what needs to be seen is a cutoff date of 29th of February. What is the balance outstanding in that account? Work out simple interest, work out what is the compound interest or interest on interest. The difference between the two you can claim from the Government of India. And while working out this, they said you ignore what has been paid by the borrower in the later after that date. Now, actually, banks would have charged, if any person has paid the money after that date, the banks would have charged interest only after considering that. So the interest on interest could be different also. So it is this methodology, whether it should be followed the 21st October, because the October 2020 circular was issued by the Government of India under the ex gratia scheme, and it was not issued by the Reserve Bank of India. So whether that would apply for the Supreme Court decision also is a matter which is pending now, where the banks are yet to finalize the methodology. Even as on today, this morning also, I discussed with one or two banks. They are still, because when we are dealing with, we generally deal with the financial accounts department. They say, no, sir, we are not the person dealing with it. It is the credit department which is taking a call on this, and we are yet to hear from them. So in most probably the entries may not be effected at the branch level when we are finalizing this, but there could be cases where certification could be sought for at branch level. If you are auditors of State Bank of India, you would find that there is a requirement under RW 44 where they are asking the branch auditors to certify what is the amount to be reversed in this regard. So there could be, I have not seen in other cases, I have yet to see in other cases. So one needs to be very careful as far as this is concerned, because this will have a very big impact. If you go by the paper reports, they say it could be for the total banking industry, this reversal could be anywhere above 2,000 crores. So individually, if you look at the branch level, each bank could be having about 200 or 300 crores to be reversal to be made. So naturally, especially if you are doing large branches with significant advances, there could be a very, very significant figure which needs to be certified, if at all, to be done at the branch level. Now, I'll conclude this the role of these branch auditors, and as well as what is the expectation for the central auditors. The closing circular and instructions to the branch, as well as the communication for the Central Statutory Audit, becomes very, very important. I know it is a very, very large document by itself, running into a few number of pages, but you necessarily have to go through the normal closing circulars regarding financial statements. Then you need to go through what are the instructions regarding the LFAR requirements, if any, whether the branch auditors have been given any communication with central auditors. Then the third one would be the ICAI requirements, if what the branch auditors have been communicated needs to be looked into. So all these becomes very, very important as far as the branch audit reports are concerned. Now, as you know, the branch LFAR, the new LFAR, as well as the internal financial control reports will have a very, very significant impact on the whole bank report, because the central auditors, even this, if the COVID is going to continue and if we are going to do it on a remote basis, then definitely the reliance would be placed on the branch auditors report only, and the branch auditors report will form a very, very significant basis for the central auditors to finally decide on the reporting on this one. And finally, the report says that the transaction level testing, the central auditors are going to entirely rely on the branch auditors report, and definitely central auditors will be doing the top 20 branches, which according to me would be the best branches of the country, which may not throw much major issues, because they will be the top 20, all of them could be standard accounts or recently parked accounts, where they may not show any signs of stress or weakness. So it would be the other than this top 20 branches could be the one which would be holding the key. And possibly these reports could decide on the future of the branch audits as such, because how much value addition we are able to make either from the branch audit level or at the central audit level could possibly decide how we are going to do the bank audit in the future. I think with this, I would hand it over back to the host for continuing.
Thank you very much for your power-packed presentation, sir. You covered most of the important aspects. I could not resist myself from taking photos of most of the slides, because everyone was so
slides yours.
Because it has very important aspects. So thank you very much for your efforts, sir. You are such a doyen in this field that given the time, you will be able to cover most of the important aspects. So thank you very much for your efforts, sir. And we are always indebted to you on behalf of SIRC. With your permission, shall I move on to the next speaker, sir? Chairman,
yeah,
sir?
please.
Now,
yes, sir. Yes, sir. Just I request Secretary sir to introduce the next speaker of the technical session. Then we will take up all the questions.
Yes, sir. So now next topic would be effective utilization of banking softwares by C.S. Sreevats of Gopalakrishnan. I take it a pride to introduce this great stalwart, because banking software utilization by HCA is altogether a higher level presentation. So Sreevats of Gopalakrishnan is a chartered accountant and a partner in KV Iyer & Co. based in Delhi, and he is a CISA and DISA qualified professional. He specializes in audits, assurances, risk advisory, IFC consulting, financial process automation, and in-days implementation. He has done his articleship in PwC, and he has contributed to the accounting standards of the ICAI as a faculty on various accounting standards and in-days. and is associated with the startup communities such as Head Start and Unlimited India, and is the chair of Young Indians Delhi chapter, the youth forum of the Confederation of Indian Industry. Is a trainee of Noida Deaf Society, which is a pioneer institution in India that nurtures deaf children. With this brief introduction, I welcome you and request you to make the presentation, sir. Srivats sir, over to you.
Thank you, Panelist, sir. Firstly, are you able to hear me clearly, loudly, and
Yes,
are you able to see my presentation?
not yet, sir.
No, sir, not yet.
Presentation.
I'm just sharing my screen.
Yes, sir. Visible, sir.
Got it.
Is it visible?
Yeah, visible. Sir.
Visible, sir. Visible.
All right. At the outset, I would like to thank the SIRC for inviting me for this seminar. It was my honor to share panel with the esteemed stalwarts and seniors of the profession like Veeramani sir, who have been hearing for the last since I have started chartered accountancy course. I also would like to thank the Ramaswami sir for having inviting me for this session and having reposed faith in me in able to deliver this seminar. So let me just give a context. In fact, what Veeramani sir has covered in his presentation, I will just add on to what he has mentioned and look at it from an IT perspective, from a technology perspective. And hence, it is very, very critical that we look at the IFC reporting that has been implemented for public sector banks from this financial year, because that holds a significant importance in the entire audits function, the entire way in which we are conducting the audit from henceforth. Thereafter, we will look at how the IRAC compliance can be looked into, can be audited, can be ensured using the various software. And lastly, the LFAR reporting. To give a disclaimer, I will not be getting into the nitty-gritty of the various reports and functionalities of the various core banking solutions that are in place at the banks, because that has been covered already by various resources. SIRC has been conducting for a long time, and those are very extensive and vast, and all of you can refer that for the purpose of ensuring that you are equipped for the various sessions or various tools that are available in the software. I will predominantly cover of how we can plan an audit, keeping software that is employed by the bank in mind, and how it is very, very critical that we deploy and use them and audit through them rather than trying to just take reports and rely on them. To set a context, I think the use of IT in banking industry has been largely automated. There are most of the operations in the banking system has been automated. Very less operations are now on a manual mode. And because of the core operations being operated, wide range of banking software has been developed for recording transactions and core banking operations to ensure that all the processes are streamlined. And hence, because the operations are automated, because the transactions are recorded and streamlined using software, the information that is generated by the IT system are the ones that are used for the decision-making purpose. So you can say the entire fulcrum of banking today in today's times depends on technology. Every bank will have technology and software for every single activity of its, and hence the extent of use and the complexity of bank's information system has a far-reaching impact on the procedures that the bank has for even ensuring controls. So here are the operations in automated technologies. Then there are processes which are again software built for technology built for processes. And after that, the internal controls, the controls that are in place are also now technology driven. Now, given this context, it is necessary and inevitable that the audit procedures also involves first understanding and evaluating what are the accounting systems and related internal controls in place. Designing the audit procedures, keeping this in mind. You have to use the efficient way in which technology works for planning your audit. And lastly, the nature of audit evidence and the techniques that is adopted also will have a far-reaching impact on account of the changes that's happened in the banking sector. Lastly, I would also like to mention the RBI, the regulator, is also very keen on getting the entire system automated. There was a September 2020 RBI circular and on automation of marking NPA every single day. Banks have a practice of marking an account as NPA at the end of the month, but they'll have to do away with those practices and they'll have to mark on us every single day. So that's the context in which we are looking at, and hence the importance of using technology. Now, as all of you are aware, there are predominantly three types of CBS that all banks in India deploy. One is the Finacle, second is banks and FlexCube. So if you look at an overview of the various operations for banking, be it retail banking or corporate banking, there is a system deployed, and be it treasury or investment, there is a separate application deployed. There are applications deployed for insurance businesses, for new business, claims processing, billing, purchase to pay, and once you ultimately get the business, convert that to cash. There are customer-facing applications for relationship service and management. Then there are the core financial accounting packages for preparation of financial statements, recording and accounting, and lastly for HR. So these are the broad areas in which there are applications in the bank, and we will discuss first the overview of how a balance sheet, a financial statement is prepared from various applications. So I've given a broad flowchart kind of a thing. The ultimate final balance sheet, profit and loss account, cash flow, and the various other disclosures and notes of the bank is a summary of multiple activities done at the branches and various other business units. So there is the core banking solutions. Then there are applications for mapping of NPA, consolidation of NPA. Then all the circles, all the branches are then consolidated into a particular circle. All the circles then consolidates for the bank as a whole. Apart from that, there will be multiple business units. There will be also the fixed assets applications. There will be the HR application. So all of these gets summed up, and there is flow of transactions from each of these software and applications. It ultimately merges into the balance sheet, P&L, and the other respective financial statement components. So as an auditor, we need to understand how IT systems are used during transaction initiation, authorization, recording, and processing. How there is transfer of data, transactional data to the general ledger and the financial statements ledger. So for example, CBS, there is loan disbursements, acceptance of deposit, and all the allied activities. Similarly, there will be certain other applications for LC and BG. Now, all of these are transaction softwares. These transaction software needs to process, and ultimately at the end of the day needs to flow into another system, which is the general ledger, for posting. So there is transfer of transactional data to the general ledger and financial statements. Then there is also, you're seeing during these times, there is a lot of advent of e-commerce. There is a lot of advent on even brick and mortar banking is now on a past. A lot of NBFCs are coming with, so even banks are now getting into retail banking. So there is participation of e-commerce. There is emergence of there is use of emerging technologies. Ultimately, what are all the various controls for movement of data from each of the software and ultimately for the financial statement preparation? is what is key for our understanding and audit. So these are the broad areas in which software applications are there. That is the financial closing and reporting process, then information technology controls, borrowing and lending, and that too various types of borrowing with wholesale lending, retail lending, credit cards and SME lending, trade finance like LC and BG, non-performing assets and stress asset groups, deposits, various cash management services that are provided by the banks to its customers, bank balances, then there is net banking. Apart from that, there is the nostro account reconciliation, fixed assets, operating expenses, and then employment benefits. These are the areas, broad areas on which applications are deployed by the bank for its. Now, for the purpose of IFC reporting, let me just supplement to what Veeramani sir had mentioned in his presentation. I will first touch upon this and look at the other aspects. There are three broad components as far as IFC reporting is concerned. One is the process flow. The process flow details out how a particular transaction is initiated, what are the various steps and processes it undergoes through, what are the checks and balances that it has, and what are the applications it is being that are deployed for the purpose of operations, and ultimately how does it get reported. So for a audit purpose, right now, not all the branches are being allotted for IFC reporting on account of various reasons. In some banks, they have adopted all branches, but then for the purpose of bank's internal control, every single branch is supposed to carry out its own internal control testing and IFC testing, and hence you need to, before even you make the plan for the audit, please ensure that you have an understanding of the various process flows which is impacting the branch financial statements. So understand what is the general objective of the processes, what are the various application systems involved, which department roles and our people are involved, what kind of segregation of duties, there will be a maker and checker process, what is the timing of the process, is it an end of the day process, it is a weekend process, is it a month end process, and ultimately what are the various tasks that are involved and the sequence in which do they occur. So this is the process flow. Every particular transaction or a sequence of activities will have a process flow. After that comes the risk control metrics. Now, risk control metrics, let's make it very, very simple. Risk is nothing but the risk of material misstatement. And if I put it in a very layman's language, for example, an advance. Now, what is the risk that an advance has been recorded at a wrong amount? What is the risk that an advance given has been disclosed in a separate account, say an office account or an inter-office account, and not in the advance account? What is the risk that instead of 10% provision, no provision has been provided? What is the risk that an account which has to be an NPA has not been classified as NPA? So to put it in layman's language, whatever is the objective or the ground rules based on which financial statements are prepared, if those are not achieved, what is the risk? So that is called the risk of material misstatement. And hence, every process flow, the bank will have designed what are all the respective risks that can occur for financial statements to be misstated. And the bank also will have a robust system in place and controls to ensure that those risks are not there. So from an auditor perspective, we need to ensure whether the controls that the bank presume and communicate that are present are operating effectively. So that particular aspect is what is getting covered at the branch. So to give you a little more broad understanding, let's take for example an advance of say 1 lakh. It is given at a rate of interest of 12%. The amount is to be recovered on a monthly basis. Say it's a 1 lakh OD account, and based on the average on a daily balance, you compute the rate of interest, and interest is computed. Now, what is the logic that is deployed in the system? That is something called the design effectiveness. So how the software has been designed to ensure that the correct rate of interest is taken, the interest is computed on a daily basis, it is computing accurately. All the loans and advances outstanding of all the borrowers has been taken. So these are all design aspects, and those are covered at the central level, at the GITC level. So when it comes to at a branch level, it's always about the operating effectiveness. So for example, if a particular sanction letter says 12% is the rate of interest, but by mistake, if the rate of interest is entered as 11%, now that is something which can be checked only at the branch level. It cannot be done at the HO or at a circle level. It has to be done at the branch. So at a branch level, you're expected to ensure that these controls are working effectively. Secondly, is the control over the data input. Now, sanction letter is the basis on which the rate of interest and the repayment schedule and all the parameters are put in. Now, you need to ensure that the sanction letter is approved. It has gone through all the various levels of approvals based on the bank's policies and procedures, and then there is a maker and checker when the data is input. Only then we will have a correctness in the interest income that is reflecting in the financial statements. So these are the three broad things as far as IFC reporting: the process flow, risk control metrics, and control testing. Now, this is applicable not just for applications or software. It is applicable across all the processes, even manual processes. These are applicable, but more so because of the fact that the banks in today's times deploy software significantly, as we have discussed earlier. This is a very necessary activity that you can undertake at your level when you start the branch audit. Secondly, like I said, let's talk a little bit more about what information is used for the purpose of testing of controls. Now, there are various reports that are in place by the systems that are deployed by the banks. Now, the source data, for example, we want a report of all the loans that are above 100 crores for our analysis and for our verification purpose. Now, the source data is the database of all outstanding loans. So we need to ensure that the reports and parameters and those that are maintained in IT system are accurate. And on a sample basis, you'll be able to check whether these reports and parameters are right. So if we have the RBI circular requirement, we can put that into place and check whether these reports and logics have been updated in the system. But having said that, I have already mentioned that these are all design effectiveness and which should have been already covered in our HO level verification. But this is for you to get an overall understanding. So apart from that, there is the report logic. Every report that is coming out from the system, which you will find as exception report, there will be certain logic that is being fed into the system. These may be automated logic, or say, for example, someone is generating through a SQL method, so through a query language. So he will pick out the parameters based on which you want the particular report. Say, for example, you want the loans that is being provided to this particular geography during the period of COVID, that is from April to September or April to October. So these are various parameters that can be done manually. So what are the steps for testing? You have to understand what is the information that is used, how the particular information that is used for control testing is prepared, how is it generated, what kind of IT or non-IT parameters have been set in generating them, and ultimately, how is it being used for the process of generation of reports. So these are the base on which the IUC is dependent. And lastly, as far as the audit objective is concerned, we have to ensure that the IUCs that is produced are accurate and complete. We need to ensure that based on different forms and the methods that are adopted in generation of IUC, based on the nature of IUC, there are standard pre-coded report or custom ad hoc report, and whatever is the degree of automation. So to give you an example, in terms of, for example, advances, it is very important that the KYC details are fed into accurately. It is important that credit rating details, whether it is internal rating or external rating details, are fed in the master data. What is the purpose for which the loan has been borrowed, so that it is in compliance with, say, for example, there is a subsidy or there is a scheme that is running for a particular loan or type of borrower. So the purpose needs to be mentioned. Similarly, the date of NPA is a significant aspect. How that date has been fed, what is the percentage of NPA that is deployed, what is the security of the amount, whether a particular, in case of certain advances like the agri advance, there is no requirement for a particular normal NPA categorization. So similarly, in case of interest income, what is the rate of interest, what is the principal outstanding, how is the system computing the principal outstanding, how is it determining the asset classification. These are the various input documents based on which ultimately you are certifying that the balance outstanding for advances, deposits, interest income and interest expense are arrived at. So let's talk about the various systems, reports and checks for IRAC compliance advance. For example, now classification. As far as classification is concerned, there are multiple ways in which we have to sort and analyze a particular advance, security wise, facility wise, segment wise and sector wise. All of these data you can get a borrower wise data analysis. So systems are tuned to ensure that such kind of reports are available. You need to understand and assess the entire document. So to start with, you can analyze the MIS reports that are there in the bank. So your MIS report will say what is the entire gamut of advances and deposit level that is there in the bank. What is the total portfolio? Which is the sector that is having maximum exposure? What is the sector which is showing profit and which is not showing profit? So these are all MIS reports then generated from the system. Secondly, marking of lien, which is primary or a collateral security maintenance. These also are system driven. So you can generate reports from the system to identify which are all those advances which is given against FD but lien has not been marked. Thirdly, correct bucketing based on rating. Now this is very, very important. Quite often we have found that the rating that is assigned to a particular advance is incorrect because of the incorrect bucketing. So for example, a particular staff advance will attract a certain credit rating or a capital adequacy rating. Because of wrong bucketing at the source data level, there is an incorrect computation of capital adequacy. So these can be generated from the system. You can take from the system the loan accounts where the limits have exceeded, the outstanding have been exceeding the limits. Now, this is very, very important. The account and the customer master data parameter setup. This is the crux based on which the entire income from that particular account is recognized. So we have found cases where the parameter has been incorrectly dropped. So there will be reports and exception reports and analysis that you can do to identify such things where the interest parameters are fed in wrongly, the repayment instructions and the repayment schedules are fed in wrongly, the linking of the interest rates with benchmark rates. So for example, be it MCLR rates or the other rate, there are certain products that are linked and there is plus or minus the risk weight for the particular borrower. So those may be fed in wrongly. So these can be analyzed through the system. Margin for the working capital facility, security and guarantee commission. So these are things that you can cover based on the systems applied. Similarly, for the purpose of conduct of the account and the turnover of the CC account based on borrower's business profile, you can do an analysis, take out reports from the system to analyze the category of borrower, what are the movement, and then accordingly make a judgment. So there are a lot of monitoring of accounts and the compliance with RBI circulars that are based on system-driven reports. So these reports are done by the credit officer or the risk officer of the bank. You need to understand what are those reports. You also need to understand what is the source of those reports, how those reports are getting generated, what are the input parameters based on which these are compiled. So that will give you an overview and you can find out if there are some deviations from the norms. Apart from that, now there is the 10% of existing CC limits that is specific, that is given as an emergency credit facility in the COVID times. You can analyze who are the particular borrowers using reports from the system who have been given this particular advance, what are the transactions and the movements in their other accounts, and how have they performed after the loan has been given. Similarly, reports can be generated for devolved bills that are parked in office accounts and that is not in the limit account. Sometimes this gets parked into some other account and ultimately it doesn't become a outstanding balance. So a review of the office account and the report generated for that particular purpose will help you understand this purpose. Similarly, as for NPA and provisioning, as you're all aware, there is the SMA 0, 1 and 2 reports that can be generated from the system. These are very, very effective in understanding which are all the accounts which is having troubles. And apart from that, very, very important is the marking of NPA. As I had mentioned before, the marking of NPA has been directed to be automated completely and to be done on a day-to-day basis. It cannot be done at the month end. So you have necessity to ensure that this is done at the day end. So system determined asset classification has to be compared with the user defined asset classification. Ensure that when you go to any of these banks, these are all not user defined, it has to be system defined, and if there is any change, it has to come through the MOC. I have spoken about date of NPA. Now, once the NPA happens, the reversal of unpaid interest or unpaid charges are also automated. So there are reports that you can generate for the particular purpose of seeing if there are NPAs and what are the interest recognized, that is unearned interest recognized for those accounts, to understand if these are reversed or not. Now, this is very, very important. RBI also have been in their meeting with the statutory central auditors mentioned this aspect about security valuation, that too especially during the COVID period. So there are reports available where you can look at the date in which the security has been valued, what is the security that is offered, and what is the valuation mechanism that they have adopted, and accordingly put your remark. Computational provision is something which I have already mentioned. Now you also need to ensure that, for example, if there are RBI circulars for a resolution plan, there are additional provisions to be maintained. Are these also automated? And if these are automated, reports can be generated for them. For the purpose of treatment of stressed and restructured assets, appropriation of receipts and income recognition, what are the ways in which remittances against restructured accounts have been accounted? What are the ways in which recovery against loss and doubtful assets and recalled assets, failed multiple restructuring, incorrect moratorium period? So these are all various aspects where system can be deployed, various reports are available for you to ensure things are in time. Lastly, for IRAC compliance, we'll look at income. Now, processing charges and documentation charges and commitment charges, these are all under partial automation. Why I'm saying partial automation is because there is a certain drop-down menu when the particular borrower has been given a loan or a master data has been created, and only if that is selected, these charges will be levied, and hence reports can be generated from the system to analyze between the new advances given vis-a-vis the various processing charges or the other charges that has been levied. Now, interest table, like I said, plays a very important role. Penal interest is something which is not automated. It has to be done on a manual basis, but the various income analysis of a particular account and the report supporting that can be analyzed to ensure to see if there are any penal interest that is being left out. I have mentioned about the fact of interest rate history report. You can take an analysis of the interest rate history of a particular account and compare that with the various RBI stipulations. Then installment start date and interest date is a future date. Now that is a huge risk that we find. So instead of writing 8th of March, you write 8th of April. It becomes a significant loss of revenue. You can look at the system reports for ensuring that these are not in place. Now, in terms of LFAR, if you look at LFAR, almost all the aspects have put a significant dependence on technology for you to comment. Be it identification and classification advances into standard, substandard, doubtful loss through systems without manual intervention. For advances below the threshold limit, So I had just mentioned the threshold limit being 10% and 10 crores. Now the LFAR specifically mentions that even those below the threshold limit, we need to ensure that the process is corrected, and we need to comment whether the processes are deployed effectively and the controls are in place. We need to look at the quick mortality in accounts where the facility has become an NPA in 12 months. These can be generated from the reports to look at the date in the advances where the low given date and the NPA date is within a period of 12 months. Now, as I said, whether the applicable interest rate has been fed into the system, whether the interest rate is reviewed periodically as per the guidelines flowing into the applicable to the floating rate. Now, this cannot be just said over a table where they say, okay, we review it periodically. You need to have documentation to ensure that these are reviewed periodically. So there, for example, we also need to mention about frequent renewal and rollover of short-term loans. So these also can be analyzed through the system. Whether valid credit rating, if available, of the credit facilities has been fed into the system. I had mentioned that a little before, that the credit rating is a critical aspect for computation of capital adequacy. So those can be analyzed. Reports can be generated from the system to see which are all the various advances and what are the credit rating deployed, and you can look at those advances which does not have credit rating. Very important, when you advance against a lien of deposits, there is lien marked on those deposits. If that is not done, it is a serious issue. Now, advances downgraded or upgraded, that is with respect to classification as NPA or standard assets during the year, these also needs to be looked into, and it is only the systems and the reports that is generated from the various applications that will help. And in unconcluding cases, for example, when the entire settlement has happened, what is the way in which the appropriation of recovery has been done with respect to principal and interest as per the bank policy? There has been deviations found. You can analyze this. And ultimately, lastly, Veeramani sir also mentioned, we're also supposed to focus on the proper systems and procedures to ensure data integrity of all data inputs used for MIS at corporate office and for supervisory reporting, which means for RBI reporting. And this is a new clause. Please give your focus. That's why I started by saying that have a look at the MIS to understand what is reported to the top management. That will help both to give an understanding of how what the portfolio of the bank is, and at the same time to discharge your responsibility as an auditor. Now, the previous slide I was talking about from a bank branch auditor's perspective, LFAR reporting. Now, there are certain aspects that we need to look at as a central statutory auditor to report in your LFAR. And why I'm covering this here is ultimately all of these aspects, some bit will depend entirely on the branch, and the comments from the branch auditor will significantly help us in our reporting. One is the comment on robustness of the IT systems that are covering software that is being used by the bank, whether the interlinkage and interface between different systems are there, the ATM network and its security, whatever payment system products and services are existing in the bank, whether they are perfectly interlinked. Secondly, we need to ensure whether software is subject to IS and security audit and application function testing and any other audit mandated by RBI. All of you will have a view of the IS audit reports that is coming into your branches, applicable for your branches. Please look at the the quality of those reports, whether those covers every aspect of security, and based on your judgment on the risk and rewards, that are there in the particular branch. Now, second is the IT security and IS information systems policy. We need to comment on the fact whether the bank has duly updated and approved IT security and information security policy. We also need to see whether the bank has complied with the RBI advisory and directives relating to IS environment and cyber security. So these are predominantly at a GITC level, at the corporate level, but for the information knowledge of the branch auditors I had just mentioned here. Lastly is the critical systems and processes, whether there is an effective system of interlinkage, including seamless flow of data under straight-through process amongst various software. Like I said, there are banks which have got about 500, 600 applications. Now, all of these applications needs to work together, be interlinked to function seamlessly. So ultimately, the financial statement that is coming at the end of the year is a summation, and the effectiveness of these applications will have a significant part. And that's where we are asked to comment on this. And special emphasis should be placed on outsourced activities and banks' control over them. Some of the activities where technology is involved, some banks outsource those activities. We need to place some more importance on them. So to conclude, I will just make a mention that we need to embrace technology to make the audit effective and efficient. There is a necessity to understand what are all the various applications involved, how an advance is disbursed, how an application is received, what is the sanction processes involved, from disbursement to monitoring to ultimately, if it goes into an NPA, then what are the recovery process and what is the process to ultimately send it off or write it off from the bank's books. The entire process can be understood. You can also look at every particular process will have broadly two things. One is the automated control, second are the manual control. Similarly, automated process and manual process. Once you understand this entire scheme of things, it will be able to help you in doing an effective and efficient audit. You may not have to do this amount of substantive testing that you do in your otherwise normal way. Secondly, there needs to be adequate training of the audit team in all the new age technologies, be it any kind of CBS. And lastly, it's not just the technologies of the client. We also need to deploy various IT tools for ensuring that we can carry out 100% testing. Even there are multiple seminars that is being conducted even for Excel. Excel is also a very powerful tool, but many of us don't use even 25 to 30% of its capability. So a training of all the audit team members in all of these aspects will be a significant help and effort. So I'll conclude with that, and thank you. Thank you, sir.
Thank you, Srivats sir. And it was a very technical presentation, and it should be useful to all the members. Maybe in the coming days there will be a lot of doubts for you who are in some section only. And now, Chairman, sir, can we start off with the expectation of regulators through panel?
Yes, sir. Yes, sir. Yes, sir. We can start, sir.
Yes, sir. I think I have to introduce Srinivasan, sir. I'll take 1 minute to introduce Srinivasan, sir. Srinivasan, sir, and Ramaswami, sir, both I'll introduce. Srinivasan sir is a qualified chartered accountant since 1984 and worked with a leading NBFC for 3 years post qualification as head of the internal audit team, and he handles firms, assurance and consulting services, qualified insolvency resolution professional, registered with IBBI, served in the following committees of ICAI, Continuing Professional Education Committee, Internal Audit Standards Board, Information Technology Committee, and Professional Development Committee. With these words of introduction, I warmly welcome you, sir. Srinivasan, sir. Very hearty welcome to you.
Thank you, and good evening, my dear professional colleagues. I thank the SIRC chairman for asking me to be part of this elite panel along with CA Veeramani sir, CA Ramaswami and CA Sreevats to talk to you on the expectations of the regulator, namely Reserve Bank of India, from the SCS and SBS. Unlike the earlier speakers, CA Veeramani sir and CA Sreevats, who took us through the LFAR reporting, IFCOFAR, extensively on the effect of 23rd March Supreme Court decision and its effect on the banks, and from Sreevats, who spoke to us about the effective utilization of banking software and took us through the information technology and how to utilize the same during the audit. I am going to speak very briefly on the expectations of the regulator, which is not normally discussed. The regulator gives so much of importance to the audit done by the branch auditors, and they rely on their findings and report. While they understand the pressure and the timelines within which the branch auditors are expected to complete the assignment, but at the same time, they express their concern in the way a few branch audits are conducted in a routine manner. As you are aware, that the Reserve Bank of India has started out meeting the SES once in 3 months for a structured meeting to discuss about the various issues they have encountered, found out, their observations on certain issues, and they ask for our stand on the same. See, the SSM team consists of a general manager and various officials, about 5-6 officials assigned to each bank. Each bank has its own SSM team, and they take care of the bank that is given to them. This SSM meeting with the auditors sometimes, turns into a fault finding exercise, pointing fingers at the profession. You are aware that RBI also conducts their inspection or audit after the annual financials are signed off, and review reports are signed off at the end of each quarter and come out with their observations. They also select borrowers' accounts, keeping a threshold, and go through the file end to end and report on certain deficiencies and issue the report on divergence and various other aspects and ask the bank for explanations. And these are flagged in the SSM meeting with us. We have been impressing on them that what we do is an audit and express our opinion on the financials within a very limited time that is given to us. Whereas they have the luxury of time and they take several weeks before coming out with their findings. It is primarily the bank's responsibility to answer them. They inform us about their findings in the quarterly meetings. They select the files of branch auditors also on sampling basis and sometimes issue letters calling for explanations from them on their report. I will be dealing with some of their documented findings. While 99% of our profession carries out the work diligently, the 1% miss is blown out of proportion by the regulators. Now I will briefly take you through some of their observations, and if we take care of this, our audit will be very qualitative. When I say branch auditors, it includes the SES also, who are basically branch auditors covering the top 20 branches with not less than 15% of the advances apart from the other central office allocations. The major observations come circling around the change in NPA date of NPA not classified or reported properly in the system, resulting in inadequate provisioning. In the case of NPA accounts, collateral securities are valued at fair market value instead of realizable value as it should be done. In NPA cases where stock is given as additional collateral, recent stock audit report not available, and the value as per recent stock audit report also not considered. These are all some of the findings which I am telling. Evergreening by sanctioning new loan accounts, by granting TOD in CASA or excess in CCC OD accounts. Transaction with the related party, interlocking of funds by the parties, especially in large advances, thereby resulting in diversion of funds. And they also have some thing to say about ensuring end use of funds, then sanctioning of new loans without security, sanctioning of new loans for OTS closure, thereby showing recovery in loan account as well as growth in loan portfolio. High value agricultural loan more than 2 crores are classified as farm credit and interest subventions allowed or availed. Uniform crop season of 12 months across all states being applied for NPA classification irrespective of farming pattern. Wrong classification of priority sector lending resulting in wrong claim of interest, subvention and other subsidy. This is viewed seriously by them as public money is involved. And then very importantly, internal accounts. Cash transactions through internal accounts to avoid AML, anti-money laundering monitoring, utilizing internal accounts to prevent an account becoming an NPA by passing a notional entry, then restructuring of advance more than the limit prescribed. Especially this you will find especially in educational loans. Either early warning signals not given due attention, no provision made for GL accounts having unreconciled balances, especially suspense accounts, major frauds through inoperative accounts, accounts made operative without knowledge of the account holder and amounts withdrawn, CRCC, risk not properly allocated, expired contingent liabilities, close scrutiny of guarantee given for long period, 10 years or more, not settling guarantee commitments on time, especially to PSU and government, not providing complete details in LFAR, various charges like penal interest, maintenance fees, etc. without proper notice to customers and non-adherence to the extent regulations. These are the things which come up for discussions almost every quarter, and they will not give complete details of their findings to us, and they give directly to the bank, to the compliance officer, and then it takes a lot of time for us to get from the compliance officer to find out what is their observation. So this is these are all some of the important observations made by RBI. I think as branch auditors, both the SES as branch auditors and SBS should take care to avoid these kind of remarks by the SSM team. So this is very important because the future of the branch audit depends on the quality deliverables that we give. So we need to take care of all these aspects while before concluding a branch audit and take care of a quality deliverable at the end of the day. So this is what I just wanted to briefly mention, and it is better we spend more time on question and answer session. That will be very effective and useful. Over to you, Secretary sir.
Okay, sir. Before taking up the discussion on expectation of regulators, I would like to introduce another great speaker for the day, Ramaswami sir. Ramaswami sir is a fellow member of ICAI and Information System Auditor, and has completed qualification in ICAI of ICAI on IFRS, International Taxation. He is a registered insolvency professional having enrolled to the Insolvency and Bankruptcy Board of India. He is also a registered valuer for securities of financial assets with IBBI. He is empaneled as an independent director with the data bank maintained by ICAI. He possesses more than 28 years of post-qualification experience in serving large and medium-sized clients in the areas of statutory encompassing application of financial reporting standards, apart from advising clients on strategies for governance, restructuring, acquisitions, and related valuations and tax implications. He has the sectoral experience, to be specific, private and public sector across the bank and financial sectors, manufacturing, trading, plantation, consumer products, logistics, hospitality, healthcare, and media also. Major projects are IOB, UCO Bank, State Bank of India. For all these banks, he has done various assignments of statutory audit, stock and book debts audit, due diligence, and professional affiliation and membership. So he is a fellow member of the ICAI and executive committee member and secretary of the Society of Auditors. And he has presented papers in various seminars, study circle meetings organized by ICAI, ICSI, and SOA. So we have proud privilege in inviting you to this panel, sir. Very warm welcome to you, sir. And may I now request you to initiate the panel discussion, sir, Ramaswami, sir, on the expectations of regulators.
Yeah, thank you very much. Actually, Mr. Veeramani as well as Mr. Srinivasan has covered in detail the requirements of the Central Branch Auditors from the statutory perspective. Though one thing I want to highlight before we go into the question and section to take the questions of the participants, the documentation is the key. We need to document whatever we cover in our LFAR as well as in our audit report. Most of the times, what we do know, we complete the audit at the branch in 3-4 days and give a report. But our file will not have sufficient documentation. Whenever the query is raised subsequently by RBI on inspection, we are bound to give the reply. At the time, we will not have any relationship with the bank. And the officers who supported us during the time of execution would have transferred or retired. It will be difficult for us to collect the details from the branch at a later date. So whenever you are commenting on anything or you are taking any stand on any particular issue, whether to report or to agree, please document those things appropriately in your documentation file. In fact, in the recent guidance note of the Institute of Auditors of India, edition 2021, as a detailed requirement list, what are the minimum documentation as branch auditor need to maintain, which please go through and ensure that that is being compliant. As already covered by Mr. Srinivasan, from RBI's perspective, the main focus area for the branch auditor is to ensure that the asset has been classified properly, whether the adequate provision has been made, whether the auditors have highlighted the early warning signal in the LFAR code. And we need to go through the comments of the previous inspections of RBI or internal or whatever external agency for the bank as well as the branch, because most of the accounts will be having multiple branch exposure or multiple bank exposure. We can check with the branch management whether there is any comment from the regulators or from the inspectors on a particular account. So that because the regulators will have a better coverage because they will be handling the audits of various banks. So they will get an input at the early date than us, because we will be exposed only to a particular branch or particular account. So it's always better to discuss upfront with all the known people whenever there is a unit of doubt, so that to nullify that nothing is gone unnoticed. And there are certain returns we need to have a certified branch auditors which have a critical impact in consolidated level, like capital adequacy ratio. If the returns or inputs are not appropriately captured, it may have a mistake at the consolidated level. So the branch auditors are requested to go through the certification requirements at the branch level and ensure that all the compliances or requirements of the visible media in the circular are being complied with. With this, I will go to the floor to take the questions from the members. So over to you, sir. Any questions till now? Can you just put on board?
Yes, sir. We do have questions.
Yeah.
Panelist, sir, can we take questions or else?
Sir, any panel discussion we wish to have, sir, or should we take queries, sir? Ramaswami, sir.
No, we can take the questions first. Depends on the questions. Accordingly, we can thoroughly come into for discussing the issues also.
Okay, sir. Well done. Yes, Selva,
Okay,
you can bring the queries on the screen. I'll read out for them.
There are nearly 10 questions here. I hope my screen is visible, sir.
Okay.
Yeah.
Sir, should we read out first question, sir? What is the threshold limit for obtaining outside credit rating agencies certificate and credit scoring done by bank? See Rajesh Agarwal, sir. Sir, would take. I'm sorry, sir.
I think it depends on the bank policy. I'll call this question. I'll just look into the requirements and come back on that.
Okay. Any other remarks by other panelists, sir? Shall we go to next question?
Yeah,
Sir, yes, sir. I am a statutory branch auditor of Indian Bank. However, not received the appointment email yet. Are the other SBAs also facing the same issue? If so,
So the appointment of the branch is not depend on whether you have done the audit previous year. That is independent. Every year the appointment is made afresh. and they will consider the existing auditors also while allotting the branches for the current year. It depends on the number of branches that need to be allotted. And the current year, due to the COVID restrictions, the banks are choosing the auditors from the local circle so that they have to accommodate more people from the same circle so that the travel can be minimized. So this you have to take it up the bank management to ensure whether because all the banks they have rolled out the letters as of now. So you please check with the bank management whether you are in the panel. If there is any error in your email ID, they will update you.
Yes, sir. Comments on red flagged accounts. Does this apply to all accounts with EWS or only to accounts with exposure above a particular threshold?
It applies only to above the threshold. If I remember right, it is 5 crore. I think I can't recollect, but it's definitely above threshold only. But then, if you look at the FCOFR and the red flagging may not be required, but the EWS can throw the controls reflection on the control systems of the bank. Red flag accounts have got its own parameters in the Reserve Bank of India circular, which says any account which has been red flagged has to be either classified as fraud or taken out of the red flag this one after investigation within a period of 6 months. So the requirements of red flag is totally different from EWS. So what we should be more worried would be about the EWS, presence of EWS, because the more if more number of more than one parameters are present, EWS are present in more than one accounts, though they could be possibly potential bad accounts in the later years, and that is what we should be more worried about, not particularly about red flag, because the red flag as such is reviewed by the bank at the top level and also by the RBI also.
Okay, sir. RBI gave 3 EMIs should not be charged interest if defaulted. For prompt payers, government gave incentive. What is the impact of interest incentive on dues paid by the borrowers in time without availing EMI deferral?
I don't think that is an item that can be answered by any of the panelists. Nor does it have anything to do with the audit that we are going to do.
Yeah.
Next question, sir. Given the situation we are in with peak second wave, elections and other holidays and the steep deadline being stipulated by the SCA, please guide us how we can conduct the branch audits from a remote mode. Especially in the current scenario, it may not be possible to visit the branches due to risk of virus and lockdown. Some essential tips on this will really help the auditors complete the audits with the deadline.
Yeah, actually, as we said earlier,
the institute guidelines on carrying out remote audit, which was issued last year, still holds good. So you need to necessarily go through that.
And
I think just to add on, see, even if you are not able to travel to that particular location, there will be branches of the same bank in your locality, in the place that you are located. So the banks are considering the situation, they are very open to that particular aspect.
I think a remote ID can be.
Banks are used to this remote auditing last year, so there's not any practical issues in permitting the auditors to go to the nearest branch and do the audit. Better train the bank in advance. Don't wait till the last date. Take it up well in advance so that they will be prepared and they have to give access to assess the records, and it can be done.
No, let us understand very clearly. Understand very clearly. Banks have also gone through this this situation 1 year, so they are better than last year. And when we even without this new wave coming, second wave coming in, even when we were discussing in February with the at the central audit level, the banks were very clear that it is up to you to decide whether you want to go physically or on a remote mode. Almost all banks have said we are prepared, if not better than last year, to provide you all the details that are required. So I don't think remote versus physical will not have any major impact this year. because almost all the, because as Srivats was telling, almost all the data is available across the branches. In fact, I am sitting in Ernakulam and reviewing about 6 branches here.
Yes, Srinivasan sir, you want to say something?
No, I just wanted to add that it will be, one can do an effective audit by sitting at a remote location that is nearest to branch and do that. But then the new requirements of LFAR, maybe one will find it difficult to get those details, the correct details, because RBI is also looking at LFAR completely. So we need to see, one need to work out as to how the new requirements and the complete the details that need to be given in the LFAR can be provided.
Yeah, actually, as Veeramani sir said on the initial speech, we need to do LFAR parallelly, and in fact, better to complete the LFAR first before we go to the main audit, because the other thing will be very simpler. Main focus will be on advances, and if we complete LFAR properly and appropriately, it will help us to complete the report also in a much simpler manner.
So
In fact, LFAR, this time they are asking complete account details, everything. So we need to take that out carefully.
Actually, the banks they are not ready, means they will not have received the instruction from the head office. You please take it up, and they will go back to the management and revert on this. I don't think now as
I think the next level of authority, the regional office or the zonal office will definitely be interfering, and you need to take up. And if I remember right, most of the banks closing circulars have communicated, or the intimation to the branch auditors, they have communicated who is the next person to be contacted. Now, banks are also very clear about these matters. I don't think there should be.
Right, sir. Is LFAR applicable for retail assets of branches which only process documents at their branch and no balance sheet or profit and loss is prepared?
No, LFAR is not dependent on whether that activity, that hub prepares a balance sheet or P&L account. It is depending on what activity is being conducted there. If advance related activity is conducted there, definitely it would be applicable. Okay.
In the case of metal loans, the borrower is debited only on the date of strike price by borrower. Till such time it is not reflected in borrower statement. How to view this in bank audit? Is the gold stock lying with the borrower? Borrower belongs to the bank.
Srivats, can you answer?
Yeah.
Srivats?
No, you asking me? No,
No, I'm saying because is that
in case of metal loans or borrow debit
loans, technology related.
In the case of metal loans or debit.
No, we just
ultimately, no. Let me just respond in this way. So you need to look at what is the process that is adopted by the bank. As per bank's policy, what is the process adopted for recognizing interest income for that particular facility? And if that particular process is adopted or not, whether the automation has been enabled or not, you can look at it and see if they are complied with. So that's, I think, the premise on which you can look at it, because it has got nothing to do is the gold stock lying with the borrower belongs to the bank. I think that is irrelevant. You should look at the bank's policy of how the interest will be recognized. Okay, maybe next one also I will look at. I will respond to it. Are you asking, as per the RBI circular, the bank has to submit system audit report by 31st May every year. What is the role of the branch auditor? So, like I mentioned, see, systems audit will help you in identifying what are all the processes that are in place, how effective that is working. So, you don't say, for example, you don't need to recompute the entire interest for a particular borrower, or you don't need to see whether a particular charge has been appropriately computed. What you need to see whether the system is functioning effectively to charge borrower after borrower the same amount. So that is one aspect. But secondly, you also need to look at whether that particular system audit report is in a checklist form, just ticking form, or they're actually doing a systems audit. Quite often we realize that that it is just a a tick box exercise. So you need to look at it from that aspect. And as I mentioned in my presentation, once you look at the process flow and risk control metrics for these processes within the branch, how effective they are functioning, and support that with enough documentation, you'll be able to comment on it.
As per Supreme Court decision in an income tax case, HF cannot be a partner in a firm. If one of the borrower happens to be HF in a bank branch, how should the branch auditor treat?
No. How should I am not able to understand the query as such, because if it is an income tax decision, then how can it reflect on the bank? If the bank has given a loan and the HUF signed it, then obviously all the these things should follow. Decision whether HUF can be a partner for income tax purposes or not cannot be a reason for a bank's decision.
HF cannot be a partner is the decision, sir. If now some HF has taken the borrowing, what should we do? That is the question. As
HUF cannot be a partner of the firm. If one of the borrower happens to be an HUF in a bank branch, see, it says HUF cannot be a partner. So I understand that it should be a firm in which HUF is a partner.
Yes, yes, sir.
That's all. See, the question is, it is only under what context is that income tax decision given?
The HUF cannot be a
partner.
partner.
Firm's registration, if a firm is taxed as a what do you call as a firm or association of persons, if it is given in that context, it has nothing to do with the bank borrowings.
Correct.
So under what context is the Supreme Court decision is what should be seen.
Okay, HF cannot be a partner. That's what he says in Supreme Court.
No, that is purely under income tax act. See, the income tax law is different from state to state. In some of the states like Kerala, where HF Act itself cannot be formed. So that is independent. So we need to see from the firm angle. Firm is a borrower as far as the bank is concerned. That we can restrict our findings with that only.
Okay. Okay. How to verify COVID-19 loan disbursed for the end use of the limit? If bank may have debited loan account and credited to CC or current account of the borrower and withdrawn cash for the business use.
These financial statements, that is why in the SSM reports also they say it is not only the account to be seen, your financial statements also important and gives a very important role. What is the nature of business? Is it required to draw cash and use it? And if the cash withdrawal is more than 1 crore rupees, now you have got the TDS under 194 yen and all. There may not be a straitjacket answer for all this, but we should be looking at the activity and what is the nature of business. Is it one which is required for cash withdrawal is required? That would all, you may have to see it in totality.
Oh, okay. What are the matters to be considered for circle office audit of the bank?
Seems to be very general. I'm not able to answer. What do you mean? What do you mean by circle office audit?
Maybe local head office or some regional office, whatever may be. So just like you have to see your balance sheet of the circle and then decide about your scope and what are the inclusions and exclusions. Accordingly, you have to decide your. And also for the circle, also the banks will give you the deliverables. You look into the deliverables and accordingly decide what are the areas you need to focus on. Mostly the circle audit will not have any assets on their own like advances, because that will be with the branches. Some circles may consolidate the branch audit return and you may have to give a consolidated report. Then you need to review from an analytical point of view whether the advances have been classified correctly and all those things. So it depends on the balance sheet of the circle.
No, just to supplement that, I think as far as circle audit is concerned, it's a summation of all the branches. Like sir mentioned, there is clear closing guidelines for how to those mix them, consolidate them. Apart from that, there are also multiple returns that you have to submit. So that may not be coming from the branches, that is independent. So you need to ensure the correctness and accuracy of those returns. Now, like Veeramani sir mentioned, a lot of the returns are web-based or automated. Now that doesn't ensure its correctness. You need to apply your judgment and audit procedures to ensure its correctness and see if they are right. So, and lastly, now this is the year-end audit. Ensure that all the key comments of all the branch auditors are populated and well considered. Even one particular comment from a branch auditor may have a significant, whole country impact. So please take care of those aspects.
And some of the deliverables of the cycle audit would be
would only be the circle office audit in that case would be done only by one of the central auditors and not by a branch auditor.
It can't be done by a branch auditor, only by central auditor, yes.
And not only that, you have a trial balance for that circle office, which may carry its only expenditure. So that also required to be gone into. If there are any staff related loans or staff related receipts are there, that also need to be gone into.
Mr. Panelist, regarding the first question on credit rating, it is a bank policy. It has to be approved by the board. That's the policy we need to. The limit is fixed by the board.
And I think even each bank has different methods of. Yes.
Yeah.
Yes. Next question. How to know which branches come within the purview of internal finance?
Can be clear instruction from the bank regarding the branches.
Please look at your appointment letter. The appointment letter definitely will say whether your particular branch is covered under ICAI review and whether you have to give a separate report. If so, the format of the audit report, etc., would be given. Please go through in detail the communication from the head office in this regard. Your appointment letter is very, very important.
Okay. So in the old LFAR, only branches having 100 crore and above advances need to report in Annexure 3. In the new format, no mention about 100 crore branches. Please clarify.
Not there.
It's 10 crore. Please go through the format. It says which are all the branches which are covered.
Okay. Does the bank provide systems audit report to SBAs when asked upon?
So I think
the number 16 is coming. Something it is getting missed out.
No, because of the answers, sir. Because of the answers and further supplementary questions. They are
Okay, fine.
Yeah. So I think all the branch auditors will be provided with the systems audit report. But I would earnestly request everyone to also look at the IFC process flow and RCM because that also will have a lot of aspects of how things are automated. Now, even if your branches are not required to be reported under IFC, the branch officials are supposed to test and carry out a assessment. So that exercise will help. So apart from systems audit, you can look at that also, that aspect as well for you to get a good understanding.
Okay. New LFAR has got details of borrowers verified to be listed out in advances table account number wise. This will include various facilities availed by such borrower and hence will be too lengthy. Rather, if it is given based on the CIF with the total outstanding per borrower, will it not serve the purpose?
No, this is a format given by RBI. This is the very first year. I don't think whether we can go and change the format because they have said account number, if I remember right.
Yes.
Yes, you are right, sir.
Yes, Mr. Selva. Next
Those
question.
are the questions as of now, sir.
Yes.
On this session.
Questions are completed, sir. Ramaswami sir will guide us how to take it forward.
It only means people have understood everything or not understood anything.
No. Today only everybody started the branch, so it will another 2-3 days. There will be a lot of questions. I think that in the next 2-3 sessions, we will have a lot of further queries from members.
Yes, you are right.
And this LFA is totally new. We are in without any. Already we are used to proper tables and checklists. Now this time, first time we are going to prepare the LFAR without any guidance. So it will be challenging for all the auditors, and particularly for the Central Statutory Auditors, we are going to rely on the report of the branch auditors. If the details are not in a proper structure, it will be difficult for us to consolidate and give our consolidated report. So
let me also add here that in many of the SSM meetings, the RBI has very clearly said we are not interested in getting a LFAR with yes, no, nil, and no.
Correct. In fact,
the questions are only indications. We are supposed to give as much details as possible there.
Correct.
No, in fact, if you look at the
it is only because such sort of cryptic answers are coming. They have now gone ahead and saying account numbers, details, moreover, all these things are asked for.
Correct.
In fact, there's also a requirement to quantify whatever you are commenting, whatever your comments are. You need to be specific and quantify rather than just make a vague comment.
Correct.
So,
normally, what will happen now, they are after completing the branch audit, they are filling the questionnaire without looking into all the detail. That's why the problem crops up.
No, that is why I said LFAR cannot be is not something which can be filled up like your audit report after the audit is over. LFAR should be the starting point for the audit.
Sir, even now the audit report we can't feel like that, sir. We have to thoroughly cover all our points in audit report when we do the work.
That is why even many of the banks have been saying you can prepare this audit report, LFAR separately and then copy paste it into the web-based format later.
Regarding the query on verified loan documents, if audit is carried out remotely, they will share the soft copy through the server. You can't get it through your mail. It will be dumped in the branch wherever you are visiting. You will get access rights to that. Reviewing that, if you want any further document, the branch will provide. Nothing, not a problem at all. Last time we had done a lot of branches like that.
No, we must also understand that today banks consider the proposals through a remote basis only. Even board meeting, no papers are being shared. It is all coming through web-based, and then the reports are getting the comments of the directors are coming in the web-based mode, and that is how the banks function today.
The only thing is you can mention in other matters that you are ready on the soft copy of the documents and you are not verified the originals. That comment you can add in your other matters.
That you can always mention. That would be probably a general comment. See, that I think that also gets covered under the institute guidelines on the remote audit.
Yeah, in fact, and that does not absolve our right also. That no absolve responsibility. We need to be careful on the litigation.
Most of the whole time, KRA also, this has been a point last year.
Yes. Bank audit is nothing independent of your normal statutory auditor. The same thing, if we can do a statutory of the company remotely, the same thing we can do for bank also. Here the documentation one additional it will be too lengthy or too bulky that we need to collate from the branches wherever is required. That's all. Chalo, any other questions?
Questions are exhausted.
Just
Fine. Then over to you, Panelist, sir.
Yes, sir.
No, actually, without hurrying through, we were able to comfortably, because you had given 3 hours time, even none of us felt any pressure of running against time,
Yeah.
There are 2 more questions.
To be committed with branch auditor who is allotted with RH. What is RH?
Yeah, what?
It must be retail assets hub, I think, which we have already answered earlier.
Okay.
What
No,
are
the detailed report, you have to see the audit appointment letter.
Reports to be submitted? Please look at the appointment letter. Most of the circulars sent out by the head office to the branches would cover what are all the reports to be given.
No, I think in addition to the 2-page letter, what we get is instructions. There is 30-40 pages. Please look into the instructions. All the details will be available there.
Absolutely.
30-40 pages of instructions, detailed instructions will give each and every branch or bank, whatever it may be.
Today,
to the bank management also, that also you can go through so that you can ensure that nothing is left out. Because certain things to be settled with the auditor, certain things to be settled with the branch manager to check whether there is any consistency or inconsistency between the data being reported by both the people.
No, I'm telling you, see, if you look at the what do you call guidance note and bank audit, that is about 900 pages. About
Yes.
178 pages is a technical guide on LFAR. About 130 pages is a technical guide on IFCOFAR, plus the appointment letter. Unless we are able to read all this and then go to the branch, I think you will find it, you will gasp there.
Correct.
In fact, I keep reading the IFCOFAR technical guide every day. Where something comes up again, you start reading from the beginning, where the answer is provided. And it is only, we can only fall back on the institute for all these matters. That is the one, because let us appreciate that these guidance note have the audits have started.
If an annexure to LFAR will be shared for documentation purposes, is a query to whom? What exactly is the question? Can you be elaborate on this?
Annexure to LFAR will be shared.
Yeah. While verifying ATM cash balance with the GL sheet, the manager says the difference may be due to withdrawal by any other customer, so could not trace what to do.
Report.
I think ATM cash differences and all, before you conclude the audit, they would have reconciled it and shown it to you. It is not that you decide on that point of time. If you go and verify the cash balance on a particular day, and anyway, in any case, the ATM balance versus GL balance has to be reconciled on a daily basis, in which the banks will have a system. And here in all these cases, what Srivats has been saying, you please look at it. Is there a system regularly happening? There could be one-off cases here and there where the reconciliation may not have taken place or the answer may not have come. But then what we need to look at is whether there is a regular system happening, whether there is a possibility of this, the misstatement happening or fraud happening. That is what we need to be more worried about. That is why if you look at the that 59/2020 circular on LFAR, you see the entire concept of the bank audit. They have changed from the substantive voucher audit to a risk management profile. That is why today you find even in IFCOFAR or the other one also, you will find the risk control matrix, or the banks, this one for the whole bank also, you have the risk mitigation plan. Today, the whole concept is on risk management. It is not on the individual items of one error here or one error there. It has been highlighted by Srivats in his presentation.
Any more sir, issues?
No, sir. Those are the questions, sir.
Yes, Chairman, sir.
Yes, sir. Thank you, sir. Thank you. We had a detailed discussion, almost 2.5 hours. So everyone contributed very well. So my personal thanks to each one of you for all the panelists. Thank you so much, sir. I request C.A. Panaraj, sir, to propose a formal vote of thanks.
Yes.
Thank you.
Sir, very great opening by Veeramani, sir. So in 1 hour power pack, you presented excellently all the aspects, especially chosen the right points that are to be concentrated by the branch auditors during the audit process. And your presentation of the slides are so good. The effort that you have been making, hats off to your efforts, sir. Your vast knowledge and your erudition and the expertise in this, the experience in this field has come to light, and it is so much helpful to the members. Thank you very much for your presentation, sir. I also thank Srinivasan sir and Srivats sir, especially on the technical side of it. And that is the area many of the members would be having so many doubts. And in the coming days, as rightly pointed out by our chairman, the question and answer sessions on 7th and 8th, we may require your guidance, and so many queries may crop up in the days to come before the audit reports are finalized. So both of you, Srivats sir and Srinivasan sir, thank you very much for your presentation and being here. And last but not least, and very great to have Ramaswami sir. You have always been supportive to SIRC, and especially this program, bringing such stalwart speakers to us. It's not an easy task for us, for chairman sitting at Coimbatore, me sitting at Bellary, getting the speakers and arranging all these things. It's so difficult. You have come very handy, and you have acted as the backbone of this program. As usual, your experience as Auditors Association, your experience and your network has helped us a lot. And in addition, you have given your wisdom, knowledge of wisdom also to this presentation. Wholehearted thanks on behalf of.
Thank you.
And another very important aspect is the delegates. See, this is the second course, and almost 400 participants have been there throughout. And this is the real essence of the contents that they are reaching our members. Maybe queries, as Ramaswami sir said, the queries may be more in the days to come. We may have to go for second session of after 7th and 8th. In the third week also, we may have to go for one more session on only question answers to help the branch auditors. So with this also, we have 400, nearly 400 delegates participating. We, on behalf of SIRC, thank each one of the delegates for making this program successful and very comfortable learning for the day.
Panelist sir, before concluding, let me just share that, we have requested in view of this COVID situations, we have requested the banks to approach either RBI and SEBI for the extension of time. So auditors need not be worried about that. Definitely there will be enough time given. But at the same time, let us try and start it in right earnest. I think most of the banks, they have started in right earnest today. There could be connectivity issues, there could be issues, but then definitely let us try our part, and there would not be any pressure from any of the banks to complete, especially because the two new areas to be covered. Banks themselves are keeping their fingers crossed what the SIFCOFAR is finally going to throw up.
Yes. Right, sir. Right, sir.
And especially because, and in many, and if you look at at least in the case of 5-6 banks where the merger has taken place, even the bank management is looking at how the merger has affected, what all new details are going to come in. So definitely this year's audit is different from what it was earlier years, and we could definitely prove our relevance here.
Yes, sir. Yes, sir. So I would also place on record the support by the office, SIRC office, and especially our Selva, the technical man, but for whose efforts, definitely things would not have been so easy. We have tried all these things some 2 years ago, sir, when we are in the last term of the council, but it was not so easy at all. Now it is so easy. Just 3 to 5 minutes ahead of the program will come on the screen and start up without any hurdles. We are able to conduct the programs. Thank you very much on behalf of SIRC, Mr. Selva.
And he is doing a lot of support in the back end, sir. He is contacting us 1 or 2 days in advance, asking us all to clarify all the queries. That only help us to avoid all these glitches when we go online. Yeah. Thank you, sir.
No, we are all only the guests, sir. Council members are the guests. The entire thing is back end director is Selva.
Even we are supported.
Last month we are not even allowed to use the Zoom conference. Now with the COVID, we are used to all these online platforms for more than 1 year experience. It's also learning for us.
This help only I have become tech savvy, sir, now, because I was finding difficulty in some areas when I was stuck up. So I used to take any desk this one and help me out, and I have become so close to all these things. So definitely deserves to a big thanks. And with this, I thank once again each one of you from the bottom of the heart, and will conclude the day's program with a very happy learning, sir. Thank you very much, sir.
Thank you, sir. Thank you, sir. Thank you so much.